we have a lot of questions that we asked our audience, and I'd like to go through them. We asked them advanced questions, we grouped them together, and I'd like to answer them one by one. Guys, can we just limit our answers to very quickly so that we can go through a lot of them? Can we have the first group of questions? Global outlook. Which stock market will have the best performance in 2022, US, Europe, or Philippines? By Joseph Bryan. Quickly, Philip. And the second question, siguro, Wilfred.
Well, my pick would be for developed markets, I'd go Europe over US. And for emerging markets, I'd stick with the Philippines.
Great. Question by Alain Joseph. Wilfred, what approach is best for long-term investors given the volatility posed by COVID resurgence in Europe that may later happen to us, to the US? What could be a long-term investment approach?
It's always the diversification, right? But I would still tilt towards the risk-free market like the US. But I would also be more bullish on Asia, ex-China at this point.
Good. Next. Philippine economic factors, what opportunities available given high inflation? Miguel, what do you think? If there are high inflation and maybe affect interest rates, what could be a good opportunity?
Well, this is assuming you're in. It's I think this is something Sue is very interested in. I'm a fan of global macro as well. But it boils down to two things. Do you think inflation will be persistent or do you think it will be temporary? So depending on which camp you are, which we wrote about in our column maybe a few weeks back, is going to affect how your investment strategy will move. So on inflation, automatically your consumer companies get creamed if it overshoots significantly. So you can use this to rotate. More nimble banks should be able to grow their net interest margin if interest rates go up. But you can imagine the bankless property normal loop, which you buy when on a cyclical upturn, that loop will be broken if your interest rates move up too much, combined with the effects of COVID. So you use this to rotate. You've got to buy quality banks, and then you're going to be underweighting consumers. Inflation gets out of hand if you think it's persistent.
Okay, banks. Next, let's go to the next PSE level. More or less, when will the stock market index reach? I wish we can say when is that going to happen, Philip? Back to the pre-pandemic level or even higher?
Next year.
Next year. Miguel, can you throw a
yeah,
guess?
There are stocks who are already back at pre-pandemic levels of earnings. There are stocks which will get to that next year. So on an index level, you likely get to that maybe closer to the end of next year or 1Q23, unless you have a significant catalyst or Omicron proves to be more benign than Delta in terms of lethality. But as I said earlier, it's better to pick stocks or just buy a mutual fund which you believe in.
Yeah, good. But Wilfred, I like our discussion. That maybe it's not the index, but more of the stocks that can really outperform.
Yeah, it's going to be an alpha play. Miguel was emphasizing on that as well. So I would think that it will be more an alpha play again for next year.
Maybe the new name.
Just point out though, I mean, if the index is going to give you 22%, if we all believe 86 is in the game, then your alpha needs to deliver more than 22%. Mm-hmm. So why take so much risk when your traditional big caps are going to do it for you?
That's based on the assumption, Philip, that your 86 will be the clear-cut scenario, right?
Your guess is as good as ours, so we're
right.
Have our own crystal balls. Sige, let's get the next group of questions. Sectoral outlook. What are those industries good to invest for the year 2020? From Angelina, what industries are expected to be drivers next year? From Lana. Miguel, I guess these are the ones that you were mentioning earlier.
Yeah, okay. I get where Phil is coming from, because I mean, probability-wise, if you're an average skill person, chances are you'll get it wrong trying to go for alpha. than just going for plain vanilla copying the index. So just to share what we did when COVID happened, defensive was the plain vanilla tilt that worked. But one thing we did which helped Phil Equity outperform is we bought Philippines without buying Philippines. And without elaborating on that too much because we're out of time, we bought Philippine stocks which are not sensitive or which are not directly correlated with the domestic economy. So moving into next year, you can have some of that. Then you can have, a bigger chunk of your portfolio in the beta that's gonna move whichever way your index does. So there aren't a lot of ICTs or nickel Asias out there, for example, but you can just have a lot of Ayala Corp, which is a good share of everything from BPI to Ayala Land and GCash, right? So again, I mean, just pick your reopening place, but pick the highest quality reopening place. And if that's too difficult or you're not inclined, buy a mutual fund.
Okay, good. Thank you. I think we have a last group of questions here. From fund investing, Jose Ramon, will equity fund investment still be good next year, or should we divert to other types of investment? Phil?
No, equity fund investment is always good. You just have to know what you're buying. Because you can walk into a showroom of equity funds and you can buy a Ferrari or you can buy an SUV, if you know what I mean. So make sure you understand the strategy you're buying. I mean, at Trump, we know we have all of our funds are performing either in the first quartile, second quartile. They're not bunched together because they have different strategies. And you have to understand what the right strategy might be for the period that you're going into. So really look into what you're...
Well, he got cut there.
The profile of the fund.
Yeah.
That's going to show you the cards. And, that will tell you the narrative of what the fund manager is thinking. And I think that's what you need to do is study a little bit deeper than just looking at performance, which is everybody's favorite thing to do, to understand what each fund is trying to achieve.
Okay. Now, Miguel, I'd like to bring you to the next question by Felnan here. Why does mutual fund move very slow compared to stocks? Is that true?
Well, it depends. I mean, if you're a superstar trader, you can imagine your portfolio will perform better than the typical mutual fund, albeit, more volatile. But you have to remember that most personal portfolios tend to be more aggressive and are also smaller than your usual mutual fund. So while the mutual fund may have, quote unquote, less upside than a smaller, more concentrated portfolio, it also has significantly less downside. And if you look at the highest quality mutual funds, they have a long track record of outperforming the market. I see no harm buying a mutual fund and having your own personal portfolio so you can compare. Then if your personal portfolio beats the mutual fund, then maybe you're gaining skill. You can move more of your money there or apply to one of the fund guys giving your lecture right now, right? We'll probably hire you. Or if your portfolio is doing more horrible than the mutual fund you're investing, you take a step back and, hey, maybe Phil or Wilfred or Miguel should just do it for me because, maybe I just got lucky and I'm not so lucky. So it depends. But if you're pretty good, my God, just send your CV to one of us.
Yeah. Okay. Good. Thank you, gentlemen. But I think Miss Trinh is still with us. I'm sorry, but I would like to point her. Is she here? Is she still here? I'd like to ask her regarding fund investment. There you are, Sue. Hi. You are the global macro multi-asset. You're looking at the multi-asset in funds, right? And we're talking about funds here. Is there anything you can add, like what kind of funds this does our viewers can look at as far as the global market is concerned?
So I'm a global macro strategist within the asset allocation team. So I don't necessarily look at specific funds as such, but I stand by what I said in my earlier segment, and that is given the uncertain macro environment that we foresee, at least for the first half of 2022, that diversification is really probably the most prudent strategy that we can recommend, and certainly looking for opportunities to tilt towards defensive growth, for instance, as well as barbelling that with select UTs and cyclicals.
Okay, now we're opening our questions to the live, and I'd like you to stay, if you can, please, Sue, to join us to help answer some of the questions that might be global in nature. Can we have, aside from the reopening play, what are the other key investment themes you see will drive performance in selecting stocks in 2022 from Ed? Miguel, take that.
Okay, well, first off, I just want to add to what Sue said. Statistically, more than 90% of our portfolio return comes from asset allocation. So that's the single most important decision you have to make before we actually go to stocks, thematics, etc. So she's in a good position to actually determine that asset allocation for clients. Now, in terms of investment teams, I mean, everyone says reopening. Okay, and then there's a camp which says, you know what, things are going to be very choppy, inflation will be persistent, let's do defensive. There's a camp which says, you know what, let's just go all in reopening because 6 months is no biggie, I invest for 1 year or longer. Okay, that's one strategy, barbell, but I think quality reopening is the most crucial. And if you think the domestic economy is going to be sluggish, you need to buy something that is more exposed to global growth recovery over, say, domestic Philippine recovery if you think we're going to be more sluggish. Because while we'll grow fast, we have to admit that base effect-wise, computationally, I think the Philippines goes back to pre-COVID GDP levels 4Q 22 or 1Q 23, barring any hitches. So, as I already harped on it earlier, but you've got to do quality reopening.
Okay. Next question. Let's get from the audience now, so that we can maybe let's answer this very quickly so we can get more questions. What is it our prediction or forecast of S&P 500 for 2022? Positive, how many percent or flat? I think he's asking about the US market, right? S&P 500 for 2022. Are we looking at more positively or flat? Sue, is that thing that you can look at?
Sure. We do think it's going to be very difficult for the Federal Reserve to actually follow through with its threats of actual rate hikes. And we foresee a policy pivot as it's really just too soon. The withdrawal of stimulus in terms of as aggressive a path as Bill Dudley suggested earlier this week seems unlikely to us. That being the case, we do think that we're in for some positive returns for the S&P. More broadly at the global level, though, the global liquidity picture will be somewhat tighter on a year-on-year basis. And historically, that has generally seen US dollar assets outperform the rest of the world.
So you see the S&P to be a little up.
A little up, yes.
For next year. Okay, thank you. Next question from the audience. You can type in the Zoom Q&A tab. On the output gap, NEDA Secretary Carl Chua has projected that it will take the Philippines about 10 years to get back to the original growth trajectory pre-pandemic. Is this consistent with your model forecast? Short, quick answer. Phil?
No.
I'm friends with Carl. He was taken out of context there.
No,
Yeah.
impossible.
Yeah. Carl meant something else. That's not what he meant when he said that.
So it will not take 10 years.
He thinks 4Q20 latest first half of 23 will be back to the pre-COVID level. He was speaking of the slope of growth here. So it doesn't mean that we're gonna do nothing for 10 years. He was referring, because Carl is a very quantitative person. He was just referring to slope.
Yeah, yeah.
I would
but
also
the point is-
add that an upside risk, in terms of the future trajectory, nothing is really set in stone. If we were to see coordinated fiscal and monetary easing, which to date we have not, that would certainly be an upside risk and close that output gap, however you wish to measure it, sooner rather than later.
Yeah, agree. Next question from in 2021, a strong US dollar was one of the reasons that drove funds out of our region. What's your view on the US dollar for 2022? Do you think the US dollar will remain strong as the Fed rises rates in 2022? From John Sue.
Yes, so the US dollar's rise it really corresponds with the tightening in global liquidity that we saw. So as I just said, that when you see global liquidity declining, typically that is bullish for US dollar assets, FX, equities, as well as rates. So to the extent that we do see sequentially tighter liquidity on a year-on-year basis, we would anticipate the US dollar to remain relatively stronger. Not to mention the fact that it's a highly political, unusually political year for right across the Asian region in 2022, with the CCP's Party Congress at the end of the year. So we're expecting geopolitical risk also to remain relatively elevated, and typically that is quite supportive of the US dollar.
So more and more could be stronger US dollar, hopefully. Next question, please. We still have a lot of questions from the audience. We'll try to squeeze them all out. Do you think going to the next year that we should look to picking up exposure on some new kids on the block stock? Wilfred, you've been mentioning this. You think should be more exposure in these kinds of companies?
I think we shouldn't be generalizing that, but obviously these names have outperformed this year, not only because they're new names, but because they have good growth stories to tell that excited the audiences, right? The investors. So I would think that for next year, if you have new names that are coming out of the block that would also have the same strength in terms of where the growth is and all that stuff, then it would delight investors to invest in those names. But it would depend again fundamentally on what those are, right?
So not necessarily new kids on the block, but they should show fundamentals, right?
Exactly.
Marvin,
Yeah.
I want to add, like computationally, if you look at the old components of MSCI Philippines, you had the net decrease acting country weight, but because of the inclusion of ACEN and Monde, the Philippines country weight was actually increased. So you can clearly see what the foreign funds are doing here in terms of allocation. By virtue of their entry, the weight of Philippines in the MSCI Emerging Markets Index was actually increased. So they are allocating more to certain names depending on liquidity and quality.
Yeah. Next, let's get the other questions. Please let's get about a few more. Then it's already 5:30. Do you think that the expected recovery in first half will be delayed again? Should a new variant surface again, or is it already considered? Meaning, is it already in the price, Philip, or is it going to delay our recovery?
Well, I think the last 3 days has put it in the price much faster than people did when Delta was first announced. So the market has reacted a lot quicker in this case, but maybe, in my view, overreacted. We don't have enough data. As a matter of fact, if you go by the data that's allowed us to navigate the last 18 months, our health system is in the least stress today than it ever been. Number of beds, number of ventilators, infection rate, all the data that you're seeing is as good as it's been.
Yeah, we're more prepared. We're more prepared, right?
And even when Delta hit, the sell-off happened, but the recovery also happened fairly quickly. I think people saw that it wasn't really stymieing too much. Now, we keep an eye on whether the health crisis will be stressed, the system will be stressed or not. But in my view right now, at least through Christmas and December and January, the fourth quarter should post some pretty decent numbers. And then we'll see where the health numbers are in January after the season.
Yes.
It's likely to be a bit higher than where they are today, I think.
course. Yes. Come on, next question, please. Let's try to get as much. For Mr. Agarao. Isn't
Wow,
it,
you named me.
isn't it possible that because of restrictions related to the pandemic, spending consumption patterns will not be the same, favoring more broadcast and social media, for example, meaning expenditures will not be as widespread as before and benefiting fewer players?
Well, first off, for media, you basically only have one now among the listed names. So it like went from 2 to 1. So at least from the listed names. For spending and consumption patterns, I expect for retail groceries, it'll be good for all of them. If you look at previous elections, same-store sales growth actually doubles every national election period for that 6-month period, 5-6 month period. So that should be very, very, very good for consumption. I just want to do 20 seconds on the previous question. No one actually knows the answer yet on Omicron, on how bad or how benign it will be. But what I can tell you is the first scientific data comes out middle of next week. If you have subscriptions to the science journals, we monitor this actually every day. But one metric I looked at, which I want to share, is what you call the viral load to daily infected in South Africa. And the only way to measure that is through the wastewater. And it shows that the viral load is much higher than it should be for the number of infected, which indicates one of two things. Number one, in 2 to 3 weeks, they're going to have a really bad surge. Or number two, Omicron is evolving to be more transmissible but more benign as well. So in about 1.5 to 2.5 weeks from now, we're going to have an answer to one of those questions. If it's number two, this is a buy on dips.
I hope your number two is correct.
Well, I hope we monitor this every day, and then I really look through the journals. I try to do it myself. So we're monitoring it day by day.
Okay, keep our fingers crossed. Next question, let's maybe get a couple more. What is your prediction for the dollar-peso exchange for the next coming quarters, and how will it affect local stocks? Any takers would like to take this?
I'll do it if no one wants to.
Yeah, go ahead, Miguel.
Yeah, historically, the Philippine market tends to consolidate or weaken if the peso weakens against the dollar. But you have a peculiar situation in the past few weeks, past month, where you have the US dollar strengthening as evidenced by DXY, but you don't have the peso weakening at the same time. Typically, the peso should weaken, but it did not. And if the peso is able to remain stable amidst a strong dollar, that would be quite bullish for equities. Hard to predict this on a quarter-on-quarter basis, but the historical correlation is like that. So it is very encouraging that despite the DXY breaking out, you have the peso still staying closer to 50.
Good. So
Marvin, I can give you a number. We're gonna see the peso at 52 next year.
Assuming things are opening up, I mean the import.
Assuming that the outlook that is out there today still is intact, and I don't see any reason for a big
52
change.
is fine. And 52 is fine.
Well, we're gonna see more demand for dollars. We're gonna see more trade. We're gonna see more imports. We're getting back to normal. That's the outlook. And if that's the outlook, the need for dollars, which has been waning, is gonna come back. So I think we're going to see 2% depreciation next year.
And will that be bad for stocks or good for stocks?
Well, if we're going to make 22%, it's not so bad. Right? So we're okay. As long as we make the 22%.
I like your bullishness. Okay, next. Wilfred, highlighted progress of new stocks like Monde. Does it affect existing stocks like the old ones like Jollibee and Ayala from Valeriano?
Well, definitely for most part of this year, it did, because obviously the investors preferred these names that outperform the general broad-based benchmark, right? But it doesn't mean that you should ignore Jollibee or Ayala, because if Jollibee and Ayala would have strong fundamentals moving forward, they can tend to outperform, these names. As we know in the market, you don't fall in love with the stock forever and ever, right? So So you look at those names, you see what the valuation matrix is, and then you see if at this point in time they're already right to pick up. It's all about which ones will outperform another one in the period that you're covering. So that's my short and long answer for that.
All right, next. Let's get more. How possible tightening liquidity in second half 22 would affect the risk appetite for reopening place in emerging markets? Sue, this is for you.
We actually think that probably peak liquidity tightening would eventuate in the first half. And as mainly the Federal Reserve realized their policy mistake, we expect that policy pivot. So actually, we see second half to have slightly improved liquidity conditions. And that should help put a cushion underneath high beta markets such as emerging markets. And that plays into our second half year Goldilocks potential.
Good. All right, sige. Maybe it's already 5:40, but allow me to just get maybe last two questions from the audience. Do we have more? Yeah, from Miguel. A few economists have been saying that the U.S. stock market is a big bubble. Some data can support this, such as absurdly high PE ratios and the Buffett indicator. Now, there seems to be a U.S. inflation crisis. Don't you think there is a real concern in the U.S. stock market? Wilfred?
Number one, you don't have an inflation crisis. Even though you have the highest monthly print in 31 years, that is not yet an indicative of a crisis or a stagflation. We don't think the U.S. market is in a bubble. I don't think Sue thinks the same way either. There are some stocks with absurdly high PE ratios, and I mean by absurdly high, negative like positive infinity or something, because they don't even have earnings. But there are some stocks which are being priced on growth and on thematic, hence that because people are look for growth in a COVID environment. So fundamentals will eventually separate the wheat from the chaff there. So does that mean that the US market can have lower returns moving forward? Yes. Does it mean the US stock market will crash? Not necessarily. It has a very good quality names in the US. I mean, how many countries have Apple, Microsoft, Amazon, Google, Facebook listed on it, right? So by virtue of that, you kind of like have a floor in terms of how far the US market falls, if ever. And if those stocks continue to grow, that's 20-30% of your S&P 500. So no, I think risk reward US is the place to be.
Philip, you have global funds, feeder funds there. You consider this?
Yeah, well, I mean, the 30-year CAGR of the S&P 500 is 11%. The last 2 years has given you 20% returns in each year. And I'm not counting from the bottom of the crisis. I'm counting from over the last 2 years. So will the US give you positive returns? I think so. Will it be much closer to the CAGR of 11%? Yes. I think it's going to be closer to that normal return of the market rather than the excess returns that US market has given us in the last couple of years.
Okay. Good. And we're really very thankful for this conversation. We've learned a lot, strategies and all, and what sectors to look at. Oh, is this the last question? Yeah.
The same question. Yeah.
Yeah. Okay. Of course, Sue, thank you very much also for joining us. We'll surely look in the future again to have you with us. Any last few tips or any last few words from each of you? Ladies first.
Strap yourself in. It could be a wild ride.
Yeah. Yes.
Always opportunity, though, and volatility.
Okay. Wilfred?
Yeah, diversification is very important because it's going to be likely another volatile year next year.
Miguel?
Just by staying alive, you already make a profit. Get vaccinated. It's true, Sue. It's true. So,
well, by definition.
Get vaccinated.
Wear your mask, get vaccinated, Have a Merry Christmas.
Okay, Phil, your turn.
Well, again, think global, diversify, like Wilfred said, but diversify globally. And don't give up on the Philippines. It's going to give you those returns this coming year, I'm pretty sure.
Okay.
Merry Christmas, everybody.
Yoko, and with that, thank you very much for your panelists, fund managers, and Sue. Thank you.
Thank you. Thank you for having us.
Good.
Thank you, everybody.
Bye.
Bye.
But allow me to close this very interesting discussion that we had. Ay nako, dami natin na pag-usapan. I hope you guys were able to learn a few things. And we had 2 days. We had yesterday, we had the economist, guest speaker, Dr. Habito, reported that the Philippine economy faced a lot of hurdles, but will be better next year. More so because we have an election next year. So fixed income, we talked about it yesterday, will help in balancing the volatilities that we may face. So put it in your portfolio as a balancing act and take advantage of increasing interest rates. For the session today, the global market continues to battle the pandemic, specifically now with the uncertainties regarding the new variant. It looks like 2022 will still be bumpy for first half, but should be more stable during the second half, as reported by Sue. More and more, we see that people and governments are getting better prepared and are quick to adapt to the new normal and the prospects of expectation of increasing interest rates. For the local equities, listening to these fund managers, we see growth is coming back. I think they are in unison that they're all optimistic for next year. There are more reasons to be looking positive, and sectors to look at are banks, property, and consumer, but be more selective. No, it's not just a pure reopening play. Look at the banks, the ones with less NPL, property with not less exposure in those that are being affected. Consumer also, those are not being affected by higher inflation. So be a little bit more selective in stocks. But hopefully these performers can help you outperform for your portfolio. Okay, so I think, so on the whole, I hope that we have given you insights on how you can manage a more diversified portfolio going into 2022 on a multi-asset approach. We talked about global investing, what could possibly be a good diversification strategy for you so that you can gear up for the next chapter for 2022. Maintain a balanced portfolio, focus on opportunities, both local and even global, so to help you reach your investment goals. So once again, I'd like to thank you all for watching. This has been Marvin Fausto. I would like to see you again in our next conversation. Goodbye.